The challenge is getting more difficult. That is, determining people as independent contractors and not employees. You can be sued by the IRS for not only the money that you paid as an independent contractor, but for the two forms of tax, the employer tax and the employee tax, and a 25% penalty and accumulated interest. If this has gone on for 3 or 4 years and you thought you could get away with it and you didn't, and the IRS catches you with an audit, don't. What more can I say? So let's cover them fast. Number one, if you have an independent contractor or are, you must have a signed contract for service, not an oral agreement, but a contract that determines what you are providing, when you're going to report, how much you're going to be paid, and the fact that you are independent. And then those things in the contract have to include either these things or they have to be things you can prove to the IRS. Number one, you cannot be directed by the company's management or CEO. This is an independent contractor. You are going to be the one who makes a decision about what you do, the quality of your work. Yes, you can be fired. If you ask for a secondary employee of yours to be able to do the job, the company can fire the company, which is you, as a contractor, but you're the one to direct who's going to do the job. Is that a surprise? You need to be a business. You aren't working just for the one firm. If you can't prove that you're working or available to work for other firms, you fail the test. And the IRS will say this should have been regular old payroll and there should have been payroll taxes. All right, integration. How integrated are you with the business? For instance, are you being directed? I just said you can't be. Are you directing somebody else within the business as if you're a manager? Ouch, you failed the test. You cannot do that as an independent contractor. So you can't sit in a seat and say to the person next to you, I want you to do this. That violates the rule of the independent contractor. Ouch. How about the term? If you say, I'm going to be working for you in the contract, there's no end of the term. You fail the test. You are an employee, even if you have that contract, even if you have your own equipment, you fail the test with the IRS. How about reporting? If you are reporting to the CEO, this is number 6, and the CEO says you must do this, even though the contract specifies what you're going to do, you fail the test because he's directing you as if you're an employee. Ouch again. So tools and materials I just covered, you got to use your own. Now, what happens if you're sitting at that desk next to the person next to you temporarily? You happen to be there and they may have a computer sitting on the desk. That's okay. As long as you have your own computer and your own desk and you use it ordinarily. And remember, you've got to have more than one customer for your independent contractor business, or you fail both cases. And the physical facility I just covered again, that is the one where if you have your own physical facility, even if you're working at the physical facility of your customer, you're okay. But if you don't, no. Number 9, works for more than one company. So I'm repeating myself, I guess. If you don't work for more than one company, you fail the test. And finally, the contract has to have a termination clause. And it's either one based on term, number 5, or on the ability of one of the two to say within X notice, usually it's 30 days, we will stop this contract. So one of the two can always pull the plug by saying termination. And how about founders? Can founders be independent contractors in their own business? No, they cannot, because they fail the law. They fail the rules that we said in the first 10. So be careful. You can't pay yourself as an independent contractor if you're the founder of a business.